Well, first up, Finance Minister Ofori-Atta has given assurance that the exemption of Treasury bills from the domestic exchange program will not be reviewed. The Finance Minister says it will be suicidal to touch the bonds because they are the main source of funding for government operations. The Minister has been speaking on PM Express Business Edition, which airs tonight on Joy News at 9 p.m.
Inevitably, you are going to get some negative responses to this. And, you know, for good reason. But are we confident that we'll recalibrate the economy where that confidence is re-engendered? I believe we will. We've done it before. And why would we not be able to do it?
Do I get the surety from you that, and I've seen that in the text Q&A, that you sought to clarify in one breath, talking about the fact that the current challenge legally be immune and all the rest. Treasury bills, there are some who are worried.
But Treasury bills
face the government.
No, Treasury bills are exempted. I mean, George, we have done.
And that is an assurance from you, Mr. Minister.
Completely. You know,
Treasury bills will not be touched going forward.
No, because we have done the sustainability analysis, not including Treasury bills. That really is how government funds its operations. And so we can afford to. Treasury bills also mimic the market. As interest rates go down, Treasury bills rates go down. 90 days, 180 days, 365 days. That has always been the way it is run. And we're expecting to continue to do that. That is where we go for our resources to run government. And let me assure you that Treasury bills would forever remain sacrosanct in this program.
That is a promise, Honorable.
Thank you.
Let's come back to this debt issue, and some will say that we've gotten here because we borrowed too much. What do you tell those who say that? We borrowed too much, and that is why our debts has become unsustainable?
Yeah. I mean, George, the question is, what did we use these resources for? And really, in a period of 6 years, in which there have been more schools built, more infrastructure done than has ever been done before, going through our COVID expenditures that we did, more people in schools than has ever been, more people being fed in schools. I mean, those all add up. But truly, I mean, taking an inventory of what has been done with roads, bridges, infrastructure, I don't think we've had any government being able to deliver that much. It's pretty easy to forget. Now, when you then look at the issue of interest payments and inflation, that causes this ballooning that we have seen, you know, and that is what we are trying to recalibrate to reduce the levels that we have and then manage ourselves on a 55% going forward, which means we need to generate a lot more income from GRA. I think you can see the
last year they did very well. They've done, maybe because it was revised, about over 3 billion Ghana cedis more than what you set out for them.
Right. And that then gives you a glimmer of what we can do. But even that, George, is about, what, 13–14% of revenue to GDP. And our target is, what, 18–20%. So imagine where it would be, and therefore the digitalization, VAT, e-invoicing, etc. We are going to be able to generate the resources, and therefore even as we cut down interest payments, revenues go up from GRA, and we should be able to manage our economy much better.
Let's look at the expenditure debt issue as well, because there are some who also say that where did these borrowings go in terms of the capital expenditure, projects that will pay for itself and all the rest, social programs and all the rest. Right. Weren't these funds going to projects that can pay for itself?
Well, they are. These projects take a long time to pay for themselves. And when you get the dislocation of the extent in which we have gotten from 2020 to now everywhere globally, you extend the period of payback. So then that becomes problematic. But it does not mean that the projects in and of themselves were bad. And we need to be really comfortable, you know, with that situation that we have and ensure that we make sure these projects are completed, they continue, and they fill in the gap of making the country accessible.
Well, that full interview airs tonight at 9 p.m. on PM Express Business Edition with George Afe. But joining us on Zoom, financial analyst Christian Tishijan. There he is with some thoughts on this comment coming from the finance minister. It's reassuring, isn't it, that Treasury bills will not be impacted by the domestic debt exchange program. This is going to calm some nerves as the financial sector was dreading this, Christian.
Absolutely, Daryl. Good afternoon once again. For the Treasury bills, even before this assurance by the finance minister, some of us analysts had maintained that, especially in our advice to our numerous clientele base, that indeed T-bills were not going to be a part of this exchange. You see, for Treasury bills, they are short-term government investments, and with a 91-day, 182, and then 365, these are not going to be part of the exchange. As we speak, that is the only source of borrowing for the government, and should it be included, the consequences we know are really going to be very dire. And I'm not sure how government machinery is really going to run if T-bills are actually included in this exchange program. So even before this assurance, some of us knew definitely wasn't going to be included. Looking at how debt exchange programs have been implemented across the world with countries that have gone through this phase as Ghana is going through as we speak.
Well, is this assurance enough to calm the markets? Because this is not the first time the finance minister, if you like, government gives an assurance and then backtracks later. He said it would be suicidal for government's finances in itself, but can we trust that this may never be an option going forward?
Absolutely. Like I did indicate earlier, before he even came in, there's been a lot of analysts on your programs and other media stations who are giving the assurances, because with these things, sometimes you need to have historical data to back it. And having gone through the IMF programs in terms of these similar debt exchange programs that have been implemented, especially in other countries, there hadn't been any time that a short-term government investment was actually a part of it. The worst-case scenario was actually making it mandatory for the bonds, which are the long-term government investment papers, to be included. So, I mean, it's reassuring anyway, but so far as some of us are concerned, we knew T-bills were never going to be part of the exchange program.
Just for the education of our audience, what would have been the implications if T-bills were attached?
All right, so the consequences were going to be dire. What it is, with a 91-day, assuming you have a clientele base that needs to utilize the particular funds and was going to just deposit it with a government investment and earn something on it within 91 days, and it happens the person cannot have access to that funds, it was going to cripple a lot of businesses, because the difference between the short term and the long term was that with a short term, the demand for the funds, it's just as the name depicts, short term, 91 days, the person needs the money. You see, with the bonds, it goes as far as sometimes 5 years, 10 years. And so you could say that the person who's deposited to have the returns or to have the money back in about 5 years does not really have that dire need for that money as we speak. So government, as I also said, as at now, is the only source of borrowing for the government, and just yesterday it was able to oversubscribe to what it was actually looking for. So if T-bills are included, it means government machinery can also not run, and government needs money to run the machinery. The capital market on the external front is close to us, so the one on the domestic front, that is the short term, i.e. the T-bills, is the only thing available for government to utilize.
And we'll speak of yesterday, there appears to be a compromise of some sort following a meeting between the Ministry of Finance and individual bondholders. The finance minister giving indication government has resolved to review the zero interest on maturing coupons for 2023, which is welcoming.
Yes, exactly. You see, bringing our debt to sustainable levels is actually a pre-disbursement condition of the IMF. And to me, it's non-negotiable if we really need the $3 billion bailout. With a debt to GDP ratio of over 100% to the desired 55 before we can actually access the fund, it's not an easy task. And government, therefore, must find the best way to get this done. Hence, this exchange program that was actually introduced. I wasn't really surprised at the the extension of the date to allow for further consultations, which did not exist prior to the implementation of the program, especially with the individual bondholders. And government has received a lot of backlash. It's one of the harshest of the restructuring programs that has ever been implemented, if indeed it was going to be implemented. And with the individual bondholders, because of the 0% coupon payment in 2023, it considered it as very harsh. And I think there has to be a balance between keeping the nation afloat in terms of the economy, and then ensuring that the livelihood of the citizenry is also protected. So I'll be surprised if any amendment to the program didn't come, looking at the entrenched position that these individual bondholders were holding, and also the things that were happening, what some analysts were saying. It's very important that government did a review to at least to include that this 2023, the 0% coupon payment was going to be changed. And I suspect it's not going to be just this 0% payment for 2023. The subsequent ones too, I know there could be certain amendments to ensure that the citizenry is cushioned, because sometime back, the finance minister made us understand that there has to be burden sharing, and everybody is trying to play the part. So I think the understanding will be there so far as these reviews go on.
Well,
so
we know
I'm
that.
Sure it really.
Yeah, the technical committee of the Ministry of Finance is meeting with the individual bondholders forum today, so we'll be following that for you. But we're also getting a sense that commercial banks are getting jittery right now. And earlier this week, the Ghana Association of Banks urged members not to sign on to the debt exchange program. Tell us what you're picking, because you're also in the sector. What are the sentiments with the handling of this debt restructuring process?
Yes, it's been one in just about 2016, 2017, the banking sector went through a lot of restructuring. Some of these institutions got collapsed, others were absorbed, and all of those things. So it's been a torrid time since then. The banks are trying to build confidence back into the system. And then we woke up one day to see that we had to go to the IMF. And so far as we are going to the IMF, definitely there had to be some sort of sustainability of our debts in a way, and therefore this debt exchange program. So it's been very difficult. All of the gains that's been made from that 2017, that the confidence in the banking sector had gone down, we're beginning to see the turnaround, and now we have this exchange program. So definitely it will let confidence go down again, and so it is non-negotiable. The exchange program is non-negotiable. We can only mitigate the effects on the livelihood if we try to do some of these amendments to have more coupon in terms of percentage payments.
We'll talk a bit more about this subsequently when we have the opportunity. I just wanted to run this by you. We have 45 seconds on this. Securities and Exchange Commission announcing yesterday that Zenith Bank Ghana has voluntarily ceased to operate as a trustee in the securities industry and the capital market. We don't have so much information except for the statement released yesterday. Are you reading anything into this?
Yes, with what SEC has been doing, the capital market has been a bit murky, looking at all of those things that is going on. If you look at Data Bank, for example, I understand they had to close some of their outlets because there were some threats to the lives of its citizenry. So I think Zenith Bank just wants to concentrate on their core banking business, that is deposits, loans, and trade activities, and all of those things. So that as and when calmness or there is a bit of sanity restored in the capital market, yes, then they will come back to play. As at now, my suspicion is that they just don't want to be involved with all of these hullabaloos going on with the exchange program and these debt sustainability activities that is going on.
Thank you so much. Christian Techijan there. He is a financial analyst. His thoughts on the debt exchange program and events unfolding. We'll talk subsequently. Thanks for your time. I appreciate it. Now, the Chamber of Automobile Dealership Ghana is lamenting the low patronage of used vehicles following the recent raid by the Federal Bureau of Investigations and the Economic and Organized Crime Office. According to General Secretary of the Chamber, Joe Dumenu, the raid has created mistrust between purchasers of used vehicles in their dealerships. Now, the Chamber organized a stakeholder meeting with security agencies to seek partnership and prevent the importation of stolen vehicles. Here's more in this report.
On 9th December 2022, UOCO, in collaboration with the FBI and the Royal Canadian Mounted Police, raided a number of used auto dealerships and retrieved several imported luxury vehicles suspected to have been stolen from the United States of America and Canada. In view of this, the Chamber of Automobile Dealership Ghana held a stakeholder meeting with security agencies to get clarity on the foregoing to enable the Chamber educate its members. Here is General Secretary of the Chamber, George Dumenu.
In our opinion, majority of these cars are actually not stolen cars, as it is being alleged. Distinguished ladies and gentlemen, is it possible that an ordinary Ghanaian importer can outwit the inspectorate agencies of developed countries like US and Canada? The checks and balances in these countries are so strict that an ordinary trader from Ghana does not have the sophistication needed to penetrate such a crime easily. We want to get clarity on the foregoing to enable CADEC educate its members, our customers, and the general public. Distinguished ladies and gentlemen, this we believe will affect such unfortunate incidents which occurred on the 9th of December 2022 from here of area.
Mr. Dumenu also used the opportunity to urge security agencies in USA and Canada to ensure due diligence are done before allowing shipment of used vehicles out of their jurisdiction.
This raid has had great consequences for our business in the used auto dealership in Ghana by creating a huge mistrust between purchasers of used vehicles in our dealership. Distinguished ladies and gentlemen, we want to call on stakeholders somewhere here to use their good offices to save the situation before it gets out of hand. Indeed, our traders, through no fault of theirs, are only struggling to make a genuine living. Distinguished ladies and gentlemen, our humble submission here is that the authorities in the United States of America and Canada do proper diligence before allowing shipment of used vehicles out of their jurisdiction.
The Chamber of Automobile Dealership Ghana membership comprised of Vehicle and Asset Dealers Union of Ghana, Korea Importers Association of Ghana, Tema Car Dealers Association, Apenkwa Car Dealers Association, and Automobile Dealers Union of Ghana.
You're watching The Marketplace. Next, our business advisory series. One of the things that stood out for me is, during our conversation yesterday, is that businesses must have efficient management accounting system in place for appropriate budgeting, monitoring, and setting KPIs. Hoping to learn some more today. And joining me in studio for the second time, Gilbert Yuenchi-Ado, Senior Manager, Tax and Regulatory, Deloitte Ghana. Appreciate your time with us. Good to have you the second time.
Yeah,
so we spoke
good
about,
to have you too. Yeah.
Yeah. We spoke about cash flow, minimizing the impact of austerity on businesses. We want to talk about the business plan, why firms should adopt a business plan in these times.
Great. So business plan basically talks about what an entity sets out to do. Now, in order for it to be very efficient, it needs to be clear and concise, ab initio. Mm-hmm. Now, this precision will then take us to what? This distinct segment that you have within your organization. So if you take Joy FM, you have the media unit, you have accounts unit, you have marketing unit. I mean, so you break the objective down to these sub-units in a clear and concise manner. What is expected of each party? What are the revenue expectations? What are the cost management models that you would have to put in place? And this has to be understood. Based on this, they're able to then set out their own clear KPIs and objectives.
Right.
Great. So you are able to then hold them accountable because you own the process and you have to see it through to the end. So it's a top-down and then a bottom-up approach where everybody is clear as to what they have to do and at each particular time. And,
well, usually hear them say you need to have a good business plan to secure credit, to attract investors. How much of a big deal is it really?
It's a big deal because you want to attract investors, but you have not made your own house clean. I mean, you need to demonstrate to investors that you have the business acumen, you have the prowess to ensure that whatever they have put into your business will generate the needed income for them to also get the needed returns. What is the return on equity? It's dividend. So if I'm to invest in your company and I look at your business model, and in terms of controls, in terms of efficiency, in terms of technical ability, they are all not present. Why should I waste my time there? Now we are talking about this haircut, government bonds. You see the hula baloo in the market space. So an investor would always want to have certainty. And having a concise and a clear business plan which sets out your asset base, your expenditure, your capital base, the key drivers, will then serve as sort something that will trigger an interest in an investor to say that, look, hey, this is a good business, and I know if I put my money in there, I'm going to yield the needed returns.
What should be the guiding principles in drawing a business plan? Because it's quite easy to put down some good thoughts, but if it's just supposed to entice investors and secure good credit, yeah, fine, I can do it. But what should be the principle behind what you're doing?
One, you need to understand what you seek to do. The market that you seek to do business in, you need to have a clear understanding of how the market plays out. That should be the benchmark. If you don't know and understand what you are going into, ab initio, you have failed. So I want to go into the media space. I need to engage consultants to help me do a market analysis. How is Metro TV faring? How is Joy FM faring? How are the competitors in the space? How are they faring? What are the gaps? Because you can only plug into the gaps. And when I say the gaps, I mean, what are they not doing differently that you can do? And that will help you to what? Efficiently penetrate the market and have the needed audience. Then you move to what? Your financing models. How am I going to finance this? Am I going to finance it with equity, or I'll go by a debt financing model? Which competence skills should I employ to be able to execute this agenda? So in order not to be too academic, I mean, these 3 KPIs are very pivotal for any business plan you seek to what? I mean, put together. And when you even send these to any bank, they will also do this analysis because they need to have that confidence in what you seek to do and if it is very viable and something that will generate the needed returns.
Based on a few experiences, I know people who, when they want to draft a business plan, will ask a friend who has also drafted a business plan, I want to see what you did, and then try and copy a few things, but then they forget one of the things is also seeking to achieve what you have written down, and talk to us about how important that is, not just drafting the plan, but achieving what's in the plan.
Good. So to be able to achieve what is in a plan, you have to have control and understanding of what you want to do. Like I did indicate, first, I want to go to Mokola to go and sell. I want to do tabletop marketing or tabletop selling. That understanding is the key. Now, the next level is, how is it being done? What measures do I have to put in place to be able to do it so well that I can outwit my competitors? Because there are people already playing the game in the industry. So for instance, now in terms of marketing, a lot of people, a lot of companies have gone on to digital marketing. So we've moved from the era where we'll go and knock at people's door, and now everything is on the internet. So how do you ensure that you also establish that presence if you want to go and operate in that space? That's why it's very important that from day one, you understand what you want to do, and that will help you to develop the action plan to be able to address whatever challenges you may face and yield the needed returns.
We have just a minute. Yesterday, you started with some tips for our businesses to stay profitable in 2023. I'm sure you have a few more to share, so I'll leave that.
Great. So because I'll be a little bit biased to my area of specialty, which is taxation, and I love taxation so much. So it's very, very important. I mean, GRA will be on the drive. Tax audit. I think 2023, and then moving on, tax audit is going to be something that the GRA will know, and it's yielding the needed revenue. So what must you do? Get the needed competence, skilled personnel to help you in doing what? Revenue recognition, adequately disclosing your expenditure lines. Let me give you this example.
30 seconds.
30 seconds, great. So the NHIL and the GET Fund, I mean, when the law was passed, the GRA alluded to the fact that these cannot be claimed within the VAT input-output mechanism. Therefore, it forms part of your expenditure.
Okay.
You understand me? Great. So in terms of recognizing this, you need to set out a different expenditure line. But when GRA comes to do withholding tax audits, if it's in printing and it's okay, great. So I think that we'll have to have another time.
You need to come back.
Yes, I really need to come back here.
Because there's so much you need to share, but our time is up, unfortunately. And so we need to go. That's the marketplace. Thanks for watching, everyone. My name is Darryl Kwak. Goodbye.
Thank you. Okay. Yeah.